In recent years, the Government of India has eased foreign direct investment norms across multiple sectors, including banking and defense, to attract global capital and strengthen economic growth. In the banking sector, the relaxation of foreign investment limits has opened space for greater private and overseas participation in both public and private financial institutions. As these policy changes continue, questions are being raised about their long term implications for the ownership structure, regulatory framework, and autonomy of public sector banks. AIBA Joint Secretary and Representative Mr. Devidas Tuljapur shared their perspective on how rising foreign investment may influence the future direction of Indian banking. The government is liberalizing FDI norms even in sensitive sectors like defense and banking. How does AIBA view this trend?
AIBA time and again has been opposing this direct FDI policy of the government. Slowly, Reserve Bank of India is also shifting their stand. Reserve Bank of India till yesterday was saying that in public sector bank, foreign equity can be around 25%. But now they are permitting up to 49%. In private sector bank, it's being permitted up to 100%. So, on a large scale, foreign investment is at the doors of the India as a nation, and nobody will invest the money unless otherwise there is a profit and control. And the moot question is about control. And with this, if they try to control the public sector banks or even for that sake private sector banks, the banking will be vulnerable. Whatever Manmohan Singh, Chidambaram, successive finance minister were arguing after global financial crisis, that Indian financial sector is insulated since majority of banking is in public sector. That was being treated as a merit. How come that it has become a demerit now? The same risk is involved even today. So I feel that as a nation, this is unaffordable. If we compromise on this issue, the entire finance will be exposed to the global whims and fancies, and ultimately it will bring element of uncertainty in the Indian financial sector, destabilize the nation as a whole.
So, do you fear that rising foreign ownership in Indian banks could compromise financial sovereignty?
Absolutely, absolutely. The history says so. Live about history. Today also, US, instead of atom bomb, they are using the money as a vehicle to compromise the sovereignty of the nation. The money doesn't go in isolation, it demands. And that demand is control over that nation. It's again a colonial structure to which we are approaching.
So, what are the potential long-term risks of allowing large foreign investors to hold significant stakes in public sector banks?
The way in which private equity has dictated the terms on the management of the public sector bank, that profit, 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 and the way in which the business model has undergone a change, the same thing will happen in case of FDI. FDI will demand the shift in policy. That mainly the casualty of those policies will be common man, who is the main strength of public sector banks today. So it's a common man along with national sovereignty which will be jeopardized.